Welcome to Business Now, your daily look at the trends shaping regional and global markets from right here in the East Africa. I'm Malcolm Sime. Today we explore the evolving trade landscape within the East African community with insights from the former EAC trade policy advisor. We also examine agritourism and its hype, or is it a game changer for Uganda? Plus, is agriculture still profitable in today's economy? Later, we unpack carbon trade assets and how Ugandans can benefit. We also close with the key updates from the financial markets, stocks, forex, and commodities. It's all coming up right here on Business Now. Let's get started.
I am sure you've heard about the EAC Regional Tourism Master Plan. That's one huge pillar under services, trading services.
I would encourage people to invest in farming as a business.
We will need more ambitious targets to support global emission mitigation and strong adaptation measures to support our nations increase their resilience.
A very own Umeme Limited has announced its intention to initiate arbitration proceedings in London to recover outstanding sums related to its concession buyout by the government of Uganda. And that's despite earlier negotiations resulting in a partial agreement of a substantial claim of $292 million, which remains unresolved beyond the $118 million already paid by the government of Uganda. The Office of the Auditor General is currently auditing Umeme's 2025 investments, which could influence the final amount paid out. In the interim, Umeme has sought an extension to publish its 2024 financial results by June 12th this year, and its counter remains suspended on the Uganda Securities Exchange. The members of the oil-producing countries are scheduled to meet to discuss a potential increase in oil production by over 400,000 barrels per day in July, and this move aims to maintain price stability and reclaim market share and fluctuating global demand. What this means for the African region is that oil-producing countries' increased global supply could lead to lower oil prices, reducing export revenues and impacting national budgets, and lower oil prices might deter investment in the energy sector, affecting long-term development projects in African countries like Uganda. And President Donald Trump has extended the deadline for imposing 50% tariffs on EU imports to July 9th, allowing more time for negotiations. Now, the impact on our region is that trade tensions between major economies can lead to global economic uncertainty, potentially reducing demand for commodities that, for instance, Uganda exports and other African exporters integrated into the global supply chains may experience disruptions, affecting trade volumes and revenues. On our CEO segment this week, we speak with Joseph Rwansote, a seasoned Uganda trade expert and former advisor with the Intergovernmental Authority on Development, or EAC. He shares insights on regional integration within the East African community, emphasizing that while full removal of trade barriers will take time, significant progress has already been made, and that's despite ongoing bottlenecks. Rwansote believes the vision is achievable with patience and persistence.
So what is the trade environment like in this region, from your experience?
That assessment is correct. And for us in the EAC region, we've experienced these challenges and we have done some remedial measures. I am sure you've heard about the EAC Regional Tourism Master Plan. That's one huge pillar under services, trading services. What is its aim? It is aimed to address those bottlenecks, to market our region, the Horn and East Africa, as a single tourism destination and as a common investment area. So what does that mean? It has to cater for all actors in the value chain.
So you worked with the Intergovernmental Authority on Development?
Yes.
EAC.
That's right.
In your experience with governments, and I know that you had access to the different governments, presidents in the region, etc., and policy makers. So what was the attitude towards, or what is towards responding to some of the of these issues that the chairman is talking about in this policy advocacy agenda?
Malcolm, there's political will to improve trade in our region. But political will is not enough. We need prerequisites on the ground to facilitate trade. You may have political will, but if you do not have conditions in place to facilitate smooth trade, then the chairman's concerns of the EABC will not be addressed. As I mentioned earlier on, we need to put right our productive capacity. We need to train our human resources to man our industries and our manufacturing. We need to train people in the services sector.
What about implementing those ideas and solutions that IGAD has, for instance, has helped to put in place?
Yeah, we already have good frameworks. If you look at the East African Common Market Protocol, if you look at the IGAD Infrastructure Tourism Master Plan, if you look at the IGAD Regional Sustainable Tourism Master Plan.
Are countries implementing those policies?
They are at the threshold. They are at the entrance, at the entry point of implementing these frameworks.
How protected is this block of ours, where we have now come from the East African community, the regional level, and even started thinking about the continental level, the EAC, the Africa Continental Free Trade Area? What is our preparedness?
Our strength and our salvation is going to come from numbers. We cannot do it as one or two individual countries. We have to do it, first of all, as trading blocks. So it's a very good thing that we have IGAD as a trading bloc. It has 8 member states. East African Community has 6 member states. COMESA has about 20 member states. Now, all this is under the African Continental Free Trade Area. This is very, very good. So our salvation will lie in coming together, closing ranks, and trading together. If you look at a few statistics, Africa's share of the world trade is 16%, not so? Whereas if you look at the ASEAN, the NAFTA, the Americas, Asia and Europe, their intra-regional trade is between 55 and 68%. So why don't we also strive towards that? If we strive towards that, we shall we shall solve the problem of arbitrary tariffs that are being imposed by superpowers on us.
Let's get back home finally as we leave. What do you think government needs to do, or governments around us need to do, to change the way we trade in order to protect ourselves from future shocks as a result of the global protectionism that seems to be emerging now? Already countries like Tanzania and others are imposing tariffs and trade barriers on their neighbors.
Yeah, Malcolm, we need to look beyond our borders. We need to think regional, think continental. Because if we do that, we'll have the capacity to absorb those shocks that are arbitrarily imposed on us.
In our Agriculture Now segment, we ask a critical question. Is agriculture still a profitable business, or is it an activity that demands a more conscious approach? Today, the conversation goes beyond farming. Agritourism is gaining traction and could be a source of real income, even in dollars. We meet Martin Kananura, a former head teacher turned agripreneur who believes agriculture is absolutely worth the investment. He also cautions that the sector continues to be held back by insufficient financing, limiting its true potential. His story and his insights are coming up.
Professionally, I'm a teacher, but while teaching, I also had a very great passion for farming, looking after goats, cows. I looked at it because if you have like one hen, it gives you 12 chicks. I have a goat here which produced 4 kids. I have a cow which produced 2 calves. So agriculture is profitable. If you plant 1 tin of beans, you end up having sacks of beans. So I was doing it as a business to supplement my salary of a teacher. You know, teachers were not getting a lot of money, but farming helped me to get extra income from the farm products like milk, meat, bananas, and that supplemented my monthly income. So agriculture is profitable. I would encourage people to invest in farming as a business. Of course, first and foremost, you need good pieces of land. But these days, there is modern farming techniques, like people do zero grazing with provision of pastures like hay and silage. You can have zero grazing of about 50 to 500 cows. I've been to Netherlands. Their animals don't move out of the sheds. They are fed within these structures. Agriculture financing in Uganda is not yet up to the required standard. I was in Netherlands. Farmers are supported very much by the government, and they give you a loan at a very low interest rate and a very long grace period. But in Uganda here, it is the opposite. They give you money, let me say for fattening. Fattening takes a year, but after 1 month, you are supposed to pay back the bank loan. So I think the government should seriously think about how they can come to the rescue, how they can support the farmer so that farming can become a profitable business.
In our asset acquisition and investing segment, we turn our focus to carbon credits, an emerging frontier for green investment. Uganda has reached a major milestone in shaping policy to guide citizen participation in this space, and the Ministry of Water and Environment has officially launched the National Climate Change Mechanisms, the Regulations 2025, and these regulations are designed to operationalize key sections of the Climate Change Act, offering a clear framework for both government and the private sector to engage in carbon markets. We bring you the highlights of what this means for investors, businesses, and climate-conscious entrepreneurs across the country.
Floodings, hurricanes, and droughts are becoming more frequent and more pronounced. It is widely expected that we will overshoot the global target of limiting average warming temperatures to 1.5 degrees. Collectively, we have not acted fast and decisively enough. As countries prepare their NDCs 3.0, we will need more ambitious targets to support global emission mitigation and strong adaptation measures to support our nations increase their resilience and preserve and restore our natural habitat and biodiversity. We have to take decisive actions to address our triple crisis of climate change, biodiversity loss, and pollution. The global stocktake showed us that we can respond and even accelerate climate action. In Uganda, we have tools to fight climate change, and carbon markets is one of these tools, and one which can be deployed quickly and potentially at scale. Markets with the appropriate regulatory framework and safeguards can help us mobilize finance to increase ambition, reduce emissions, fund adaptation efforts, and help to support biodiversity conservation efforts. We need new project types in agriculture, energy efficiency, sustainable waste management, green buildings, electromobility. We must take full advantage of the global market through the Article 6 mechanisms of the Paris Agreement. Through a collaboration with the EU, GGI is implementing a project aimed at operationalizing Article 6 of the Paris Agreement in Uganda. As part of this initiative, we work with the CCD in effective operationalization of the article, mechanisms, and the country's participation in carbon markets. In addition, through our partnership with the Climate Finance Unit and the Climate Change Department. And with support from the UK and European Union, we have also conducted Article 6 mitigation activity sourcing and are developing NDC tracking tools to support NDC accounting and reporting of Article 6 activities. We are doing this in a very flexible approach, responding to the needs of our government counterparts effectively and as efficiently as possible. We are proud of this partnership. We're also happy to be part of this development partner group of countries that are supporting Uganda and going with Uganda in developing these markets, mechanisms, and regulations to unlock for the climate finance and climate action.
Now, as we head into holiday, most of this week, the Uganda shilling opened the week appreciating marginally against the US dollar. And that's on Monday, June 2nd, strengthening by 14.14 shillings on 0.31% to close at 3,622. This marks an improvement from the previous session's rate of 3,633. The shilling's modest gain comes amid stable market conditions and continued investor focus on key equities, particularly in the telecom, banking sectors. Now, on 2nd June 2025, the Uganda Securities Exchange posted a slight uptick, with the all-share index rising to 1,262 from 1,262, and the local companies index edging up 342 points. Market turnover reached to 29.94 million shillings across 28 deals. That's as of today, with trading activity dominated by MTN Uganda, Stanbic, and Airtel Uganda. Now, MTN Uganda led the turnover at over 10 million, while Stanbic registered the highest volume with nearly 667,000 shares traded. That's despite minimal movement on most counters. So investor interest in telecoms and banking stocks continues to shape daily market momentum, according to experts. Now, before I go, you have your chance to achieve or attain all your dreams, and you can talk to none other than Absa Bank to make that possible. If you're in entrepreneurship, you have a business, or you want to buy a car, or you want to take your kids to school, Joga 2025 with loans of up to 600, 300, and 200 million can make all that possible. You can see this program once again on our YouTube channel and follow us on our social media platforms. This is Business Now.